Good morning everyone and welcome to Moneycontrol live stream. You're watching the opening bell and I'm Santosh Nair. Well, in today's spotlight we shine the focus on metal stocks. Now, metal stocks have had a pretty volatile 2022, huge run up and then a sharp fall after the government imposed a tax on exports, but since then they've also made a fairly good comeback. Now that begs the question, is it once again time to be looking at metal stocks? Now, brokerage house Jefferies definitely thinks so, and Jefferies has upgraded its ratings as well as price targets for Tata Steel as well as Hindalco. It's now set a price target of 150 rupees for Tata Steel and a price target of 600 rupees for Hindalco. It has a buy rating on both stocks. Now, what are the triggers for this change in stance by Jefferies? Now, according to the brokerage house, the big trigger is the fact that China has now started easing its COVID restrictions. That's a big positive. And besides, Jefferies feels that China is also trying to resuscitate its flagging property sector, which means more investments headed that way, which then means that more demand for metal, particularly steel. So this is the big trigger according to Jefferies. Besides that, Jefferies also feels that based on historical valuations, the stocks are now, at least particularly Tata Steel, appears to be reasonably priced. And according to Jefferies, the big earning cuts and also the big pressure in terms of the margins that the steel stocks had been facing over the last few quarters, at least that is behind for the time being, and so it's positive on Tata Steel as well as Hindalco. And let's move on to the newsmakers section now. Jindal Polyfilms is a stock that could be in the limelight today. There was a big fire at its Nasik plant, and while the financial estimates are not yet known, the fire has claimed 2 lives and also injured 17 people. MOIL is the other stock which is likely to be in focus today. Now, the company on Sunday announced that it was hiking the prices of its ferrograde manganese ore prices by 7.5 to 15% depending on the various grades. And let's take a quick look at the trade setup ahead of the bell. Now, SGX Nifty futures are indicating a weak start for the market this morning. The SGX Nifty is down by close to 45 points as we speak. Overnight, European and US markets both ended lower, so pretty negative cues there to begin the new year. If you recall, on Friday also the market had closed on a weak note. The near term technical indicators for Nifty are all flashing negative signals at this point in time. The Nifty is a good way away from its 50-day moving average of 18,261, which right now is acting as the immediate resistance level. According to technical analysts tracking the charts, the key pivot points for Nifty, the short term points, that is, they are first 18,080 and then 18,036, and a near term strong support level for the Nifty is the 18,878 mark, which is also the 100-day daily moving average for the Nifty. So these are some of the key support and resistance levels that will be closely tracked by technical analysts at this point in time. And moving over to the F&O market, the maximum number of call options on the Nifty has been written at 19,000 level. That's where the maximum number of open interest is there, which basically means that that could act as a key resistance level for the index in the short term. The Nifty is a good 900 odd points from there, but that's the near term resistance level for the index at this point in time. Writing of call options basically means that a lot of investors in the market do not expect the Nifty to cross that level anytime soon. And on the lower level, 18,000 is where there's the maximum number of put options outstanding. So it's safe to assume that 18,000 could act as a near term floor for the Nifty index in the short term. And well, with that, let's move on to the hot brokerage pick this morning. It's MCX by Morgan Stanley. Morgan Stanley has an underweight rating on MCX at this point. According to Morgan Stanley, the average daily turnover on the exchange was down by about 8% in the month of December. Now, average daily turnover is key to the profitability of or is key to the revenues and profits of stock exchanges and commodity exchanges. So, decline in that basically means that lower revenues and profits. Now, the fall in average daily turnover on the MCX was largely triggered by lower volumes. Besides that, MCX has also recently extended its software services contract with 63 Moons. There was some sparring over that recently, but now that's been extended for another 6 months. So, that gives MCX some more time to migrate onto its new software platform. And let's move on to some of the stocks that have caught our attention this morning, starting with VRL Logistics. Now, VRL Logistics, this stock has been under pressure of late. It's down by close to about 24% from its recent highs. According to Motilal Oswal, which is very bullish on VRL Logistics, the company has increased its prices by 5% recently, and the price hike basically covers 60%. It covers categories and products that account for almost 60% of the overall volumes. Now, the last time VRL Logistics had increased its prices was in April 21, and according to Motilal Oswal, now VRL is a pure goods company since it has now sold its bus business recently, and despite the recent price hike in its products, VRL Logistics expects to see a volume growth of close to about 20% in the current fiscal. Motilal Oswal estimates that VRL Logistics volumes could revenues and profits could grow by 15% at a compounded rate and 20% respectively over the next couple of years, and it has a buy rating on the stock. The next stock on our watch list this morning is Jubilant Foodworks. Now, the company has recently launched a 20-minute delivery and also Italian gourmet pizza. Now, the delivery time has been shortened from 30 minutes to 20 minutes, and according to Sharekhan, which has a bullish view on the company, this is expected to improve customer experience, and besides that, the launch of a new product could also mean that it could attract new customers, besides also getting some of the existing customers to try out the product. And also Sharekhan has mentioned that there are plenty of near-term headwinds for Jubilant Foodworks at this point in time, which is mainly rising raw material prices. Prices of both wheat and cheese have been steadily increasing, so that's a negative for Jubilant Foodworks at this point in time. However, Sharekhan feels that overall valuations are pretty supportive, and that should limit the downside in the stock. Jubilant Foodworks is down by close to about 36% from its recent high, but Sharekhan has a buy rating on the stock with a price target of 770 rupees. And the last stock on our watch list this morning is JK Lakshmi Cement. Now, this is a major player in the northwest and eastern regions of the India with a capacity of close to 14 million tons. Well, with that, the market has opened. Let's take a quick check on the market. Bajaj, I beg your pardon, it's a slightly bearish start at this point in time. Overall, 1600 stocks are down on the NSE at this point, and about close to 400 stocks are up. The Sensex is flattish, up about close to 80 points. The Nifty Midcap Index is among the gainers in early trade. It's up by close to about 169 points. The MOIL stock is up, and MCX stock is down by close to about 5% to 1,465 rupees. And the last stock on our watch list, JK Lakshmi Cement. Now, the stock has been among the better performers in the cement space. It's almost doubled over the last 6 months. However, Geojit Securities has a sell rating on the stock. It feels that valuations are pretty expensive at these levels, and also it has highlighted the fact that raw material prices, while they have come off a bit, they are beginning to moderate. However, they still continue to remain at elevated levels, which is not a good thing for cement companies in general. And lastly, on the valuation front, according to Geojit Security, a fair value for the stock is roughly about 7 times EV to EBITDA for FY25 estimated. So, based on that, the fair value of the stock should work out to around 710 rupees, which is a good 12 to 13% below what the current market price of JK Lakshmi Cement right now is at. Well, with that, we wrap up this edition of Opening Bell. Thank you for watching, and we'll be back at 3 p.m. today. For all news, views and analysis, Stay logged on to moneycontrol.com.